Alright, I hope everyone can hear me. So this is a pretty interesting live stream, right? The last time when this happened, or at least when the Feds printed funds or printed money, right? It was very different. They did not really purchase assets. It was really just to stimulate the economy, provide a lot of cheap liquidity, just to keep everything going. But now they're purchasing everything. So my question is, how are they doing this? And I think you should be questioning this as well. Like, where is all this money coming from? I mean, if you see, if the US debt is already in the trillions, okay, um where is all this money coming from to buy up all these assets that the Feds are planning to buy, right? So this time around, I mean, this article just came up, right? Let me just share the article with you guys. Okay, so let's allow some people to come into the stream, or else it will be like repeating myself over and over again. What's up, Dylan? So let's go to the screen share mode. So the Federal Reserve just pledged asset purchases with no limit to support the markets. Woohoo! So you are kind of seeing the repercussions of the obviously it all started with the lockdown in the US, right? And of course in Europe and many other countries are also locking down because of the widespread of the coronavirus. Now, but to me, this is one of the ways of kind of resetting the economy, right? Or finding a reason to do so. Now, obviously, I am no economist. At the same time, these are all my personal opinion. I am just a guy making YouTube videos in my t-shirt. So, whatever I say is not word, is not like official. It's just more of, speaking with people. I'm an average person myself. I just want to, create content. At the same time, I just feel that people should be a little bit more aware about what's going on. So back in 08, 09, right, that was the subprime Lehman Brothers. The whole financial economy crashed in the US and caused a very large ripple effect across the whole world. Now, this time around, it is deemed to be based on the coronavirus that started out in China because people were eating bats and so on and so forth, and then gradually it started to spread within China and then to the rest of the world. Now in Singapore, so far there are no serious lockdowns. Our schools are still functioning. People are still going to work. However, obviously, we still have to be very cautious about the situation and keep there's social distancing where you try not to be too close to each other. At the same time, in the event that you are having a little bit of the sniffles or you are having a dry cough or fever, obviously you don't go to work, or you go to school, or you keep your kids in you don't get your kid to go to school, or you just stay home, like you do a self quarantine. I mean, it's like a no brainer. But of course, I've been seeing a slew of Americans who are having the spring break at the moment, and yeah, the kids are still going. Like, wow, so I think literally there's zero fucks given about whether or not you have it and you want to pass it to someone else, or if that person has it and you get it from someone else. It seems like being American, you have super immunity system, but never mind, let's not talk about that. I think that's completely a personal preference at the moment. So right now I feel that, where is the money coming from, right? And obviously this is one of the repercussions that are going to hit the world economy, or at least hit the US really hard in the future. It's not gonna. It's already happening right now. All assets are unwinding, and that is why the Feds are coming in, pledging, and obviously wanting to buy up whatever assets they can. Now we're talking about corporate bonds, investment grade securities, ETFs, equities if they can. They're trying to support the market artificially. Now, the I mean, let's just face it, guys. If you had $10,000, okay, let's say you had $1,000, how much can you buy at this current point based on the current prices, right? You can buy $1,000 worth of stuff. Now, if you had a magic millstone, now I read this storybook to my daughter where the magic millstone, when the emperor taps the millstone 3 times, the emperor can ask for whatever he wants, or whoever taps the millstone 3 times, you can actually, create more of whatever that particular item that you ask. All you have to do is tap 3 times. Does the Federal Reserve have a magic millstone? Well, unfortunately, to me, the magic millstone actually comes from hardworking pensioners, right? We're talking about governments, anyone who is entitled to a pension, right? You're talking about, you're probably looking at firefighters, teachers, government servants, civil servants, right? Anyone who has a pension basically, and you're looking at people who are paying their taxes, right? Hardworking American people paying their taxes. Yeah, these will be the people who will be footing the bill in the years to come. I just don't see where the US is getting all the funding from. Like, in the first place, when this happened during the Ben Bernanke period, right, when they were printing endless amounts of money to support the economy. Right now, they're doing it again, right, in a different way, but this time they are clear-cut telling people that they're doing asset purchases. Now, it may seem like a good thing for the overall economy now, for especially if you think that, okay, you're an investor, the market is being supported. But in actual fact, right, if you think about it, it's only going to cause things to become more expensive in the future. Okay, why do I say that? It's not that so firstly, obviously the items that you all know now. Okay, I think and the average person doesn't even care about the stock market. They're not interested in stocks. They're just caring about the fact that when I get my basic salary, okay, I'm going to obviously buy food, groceries obviously, and fuel to fuel, and I'm gonna be buying and I'm gonna be paying for my my basic necessities, the shampoos, my bathing, whatever, basically, okay, all these essentials, right? We call them essentials. So all these things eventually, right, will go up in price. Now, it may not be like a significant amount to you, but it's in percentages. It's gonna hit you in percentages. So for example, I don't know, maybe a pack of toilet paper, for example, maybe it costs $5. It's gonna cost $6 next time, okay? But it's just $1. To the average person, it's just $1. But in actual fact, it's only going to hit you very much later when you realize that your salary is not really keeping up. So what's gonna happen is that you're gonna be working harder. You're gonna be working probably the same amount of hours. At the same time, you're probably going to take on other people's roles, right? Until the economy obviously goes up and progresses. Then you'll realize, okay, at least I still have a job. You see, that's how they put you into that scenario. Everyone's getting retrenched, okay? Everyone's losing their jobs. But, you are the most qualified individual, so obviously we're not going to get rid of you, right, within this department. But you're going to have to handle person B, C, and D who are no longer in the firm, right? But because you are still here, we are unfortunately not able to give you an increase at this point of time, but at least you still have your job. So end of the day, you're working harder than you've ever worked before for the same amount of pay, but at least you get to keep your job. Woohoo! So that's when it all starts, right? But when the years go by, obviously the economy will eventually improve, but you realize that your paycheck didn't really go up. Now, you're still having all these bills you still have all these bills to pay for. The mortgage obviously didn't go down. The valuation of your property probably went down, but eventually the economy will eventually stabilize. Okay, that's just how it works. Okay, it's just magically it will just start to improve. Okay, when it starts improving, that's when interest rates start picking up and creeping up slowly. All right, you'll see oil prices start to creep up slowly again, and that's when it hits you. This is something down the road, guys. It's not going to happen in the months to come because the whole economy is just so fucked at the moment, right, that they cannot afford to to have too many defaults. Now, this is unavoidable. There are still going to be many people are going to lose their homes. Okay, this is just the way things are. Okay, I know it would have been better to hear it from an American individual, but you know what, sometimes you just have to just put it out there from a third person perspective, an unbiased opinion. I'm not here to go and tell you that this is it's just bad, guys. It's just bad. And if no one tells you the truth, I think it's just even worse. So might as well, let me be the so-called bad guy to bring the news, and then from then you go and think about it, go and reflect upon it, and see whether or not it's really that bad. So anyway, firstly, because of this lockdown, profitability is gonna be affected. Okay. So when profitability is affected within your company, what do you think is going to happen, guys? What do you really think is going to happen? Obviously, there's going to be some restructuring, right? And that restructuring meaning that, unfortunately, the ones that are, more likable, they're going to be kept within the company. Certain departments are going to go. It's already happening in Singapore, guys. There are departments that are made redundant, okay? And so people are obviously going to lose their jobs. There are severance packages that are going to be paid for the number of years that you are with the company. But there are times when, sometimes the company just doesn't have those kind of books and they have to shut down. We're talking about, it's bad, guys. It's actually bad. It's affecting even companies in Singapore. We are not completely immune. Not only that, now you have an extremely strong US dollar, right? Because of all the fucking assets that just left the stock market, right? We're talking about trillions here. So obviously the US dollar has strengthened, right? Against any other currency that is not having this issue at the moment. So it's just like US dollar tether at the moment, right? Because recently there was a sell down in the crypto markets. So when the crypto markets actually sold down, a lot of the funds from the altcoins actually left. If you realize your altcoin portfolio is pretty smashed, but your BTC, it seems to be going up. It's kind of the same, guys. It's really kind of the same. So gold is actually holding and rebounding very well. Now, gold has always been known to be a hedge against inflation, right? So when your US dollars is actually dropping in value, right, you look at gold as a hedge, and that's kind of like what's happening right now. And no one obviously really cares about buying gold because, firstly, you can't be carrying around a bar of gold and exchanging that for food or supplies or even just fueling your car. You can't do anything with that. But right now, I see gold to continue to actually hold and be well supported above 1,400 to even 1,500 if this shit show continues. It's just the way it is, guys. And you're going to see gold remain supported even when the economy starts to recover. So, for example, if I go to the charts at the moment, okay, if I go to the charts, wait, why is it? Okay, wait, yeah. So if I go to charts at the charts at the moment, I'm gonna go do a 1 month so that everyone can see this a little bit clearer. Oops, sorry. Okay, so in the past, right, obviously gold for this period of time, right, after the economy started to recover from 0809, this is 0809 where it was about $750 to below $1,000. Now I would say that the US dollars, gold will probably remain supported on the higher spectrum. So obviously this just recently happened, so it's still too early to say where it will remain supported. But I don't see gold going back to the previous lows ever again. It will never happen because as the economy is trying to heal itself, right, everything is just going to go up. I mean, everything is just going to be astronomically more expensive, right? It's like it's so challenging to kind of put out something where you can actually help people, because right now people are already strapped already. People are already concerned about their jobs. They are not really concerned about where the hell am I going to put my money. There are some folks who are obviously within the groups thinking, okay, where can I safely park my money? And the truth of the matter is that banks are going to go into a zero to negative interest rate environment. Savers are going to suffer. Okay, it's like, oh, because you're putting your money with us, right? Bank of whatever, right? You are going to have to pay us because we're keeping your money safe, right? You know that if you put your funds at home, there could potentially be house break-ins, robberies, so on and so forth. You don't want that, right? You want to keep your money safe. Here, keep it with us. But the actual crooks are actually the banks, right? And they are literally robbing people very, very slowly, right? And obviously, there seems to be no bank run at the moment, right? But when people are desperate and when people need funding, I realize there are some ATMs around, in the US that are limiting the amount of withdrawals. So it just goes to show that if everybody tries to withdraw all their funds at one shot, right? It is clear that the banks don't hold enough money to support everybody. Now, there are some folks who are more well off than others, right? We don't need to talk about those folks. I'm more concerned about the folks who don't have enough to get by already, and now this shit show happens. From having a maybe full-time job or at least a decent part-time job to now not having a job at all. I think these people are going to be the most hard hit, and even with whatever stimulus package that Trump has just announced, or whoever is just approving this, all right, you're giving $1,000 to every American individual. I'm not the right person to comment whether or not it's good or bad. To me, whenever you give handouts, right? Whenever you give handouts, someone has to pay for it. Simple as that, right? But right now, I guess it's not really the main concern, because as long as I have some kind of funds from my government to allow me to put food on the table, or at least be able to buy supplies, right, for my family, right, my family, so that they can live for at least have food for the month, I'm thankful. But do you think that this kind of gravy will come every month, right? I think it's one of those things, guys. And I think it's not about me recommending what to put our money into or grow our funds. Right now, everything is going to just get smashed, okay? Until the whole until basically this stabilizes, okay? Firstly, the coronavirus has to be contained, right? That's why when I see all these people, right, congregating in the thousands, I have no words to express, right? And I'd rather not comment. You be the judge, all right? And this is the part where the continuity, the ignorance, will only hurt the economy further, or hurt the country further. It's just the way it is, okay? And when I see all this happening, although, okay, so SARS, right? Okay, let me just talk about SARS, right? The Singapore economy was hit by SARS in 2000 to 2003, but we bounced out of it, right, after 1 year. In 1998, we had the financial crisis. We bounced out of it after a year. Okay, for the coronavirus right now, is still too early, so maybe we'll take a year or two. Okay, but what happens is that if we just be a little bit more vigilant, we will bounce out of it as well. So let's just assume 2 years. Okay, let's say it takes 2 years to just clear up. The airlines start coming back, people start traveling, tourism comes back, people don't hate each other so much. Then okay, things start to heal. From there, everybody starts hiring again. Those companies that are still around starts hiring. From there, the economy starts healing and everybody starts having funds. Okay, back to work, right? But in the meantime, assets are going to get pummeled. Stocks, crypto, Bitcoin is doing pretty well. Okay, it's pretty shocking. Bitcoin is doing pretty well at the moment. To me, a digital asset at the end of the day is only as good as how well it can be used. As long as there is a free flow of the way that you can buy and liquidate, obviously people will take the opportunity to speculate on it, right? And whatever, I clearly know the halving is coming. Okay, I clearly know that the rewards are going to be slashed in half and it's going to be 50%. But I think that's beside the point at the moment. When people are focused on, doing their best, I notice that people are, those who are more concerned about their jobs, right? They are really working very, very hard on a daily basis. Okay, they're working very, very hard on a daily basis, even during the quarantine period, during the lockdown period. They're still working very hard, making sure that they produce the best, quality of work, right? Whereas everyone else is obviously taking the opportunity to take a good break, spend time with your loved ones, do a lot of self improvement. This is the time that allows you to really reflect, right? And I know that people are going to either become better, a better version of themselves, or they're just gonna be really lost. And this is the time when you kind of ask yourself, wow, why didn't I build up, other streams of income, or why didn't I kind of invest in certain things when I could? Why did I spend on certain stuff that I could not afford, but I put it on credit, right? These are the things that are gonna really hit home, and a lot of people are just gonna default on their personal loans. That's for sure. They're gonna default on their personal loans. They're gonna eventually default on their mortgages, and that's when the whole thing starts to unwind. And this crippling effect, right, is going to be felt months later. Okay, it's going to be felt months later, because firstly, the F&B business, commercial, retail stores, everything is not going to survive, because firstly, they're going to be nice landlords, but majority of the time you're not going to get nice landlords where they'll say, okay, look, we'll foot the bill for now, you focus on rebuilding your business. Sure, there will be some love heart stories that will be, wow, I have a great landlord that's not collecting any rent from me for the next 3 to 6 months until we kind of pull out of it. That's great. I believe there will be some great heartfelt stories out there, but in the real world, it just doesn't exist. People are still going to collect rental from you, and unfortunately, if you don't pay up, right, because people who own assets, right, they are also, they either have a loan on the building, or they own the whole they own the whole building, they own the whole unit. If you can't pay rent, you get out, right? The most they'll give you some grace period, the most you can negotiate a little bit, but push comes to shove, eventually they'll just have to kick your ass out. It's and that's the truth. I mean, I'm just putting stuff out there, that how I see things that are gonna be happening, right? No one likes to listen to this kind of shit, but it's stuff that you have to prepare for, especially if you are clearly in that situation. What are you gonna do? You know what I mean? And I think things are gonna get really, really bad before it gets better. That's the truth. I don't know what to say. It's yeah. I think stocks are in a very, very good spot at the moment. I think stocks are gonna go only, they're gonna go cheaper, guys. To me, where I'll be looking at, okay, so let's talk about what we're gonna invest in, right? I personally am gonna be looking at my own Singapore stocks, right? I am going to be waiting for certain key levels. So I'm waiting for the S&P to actually hit below 1,008, right? Even with this asset purchase, right? Any bounce is a sell. Any bounce is a sell. I think the retail investors, right? The retail investors in the stock market clearly are not, I mean, they probably registered already, right? They probably registered that this is really bad shit. Okay, so let's look at the S&P. So when people tell me that, wow, okay, the stock market is only gonna go up, and obviously, this is just, it's just a glitch, it's just a glitch. It's gonna recover, guys, it's gonna recover, it's gonna recover. So kind of like what I mentioned in my private group, right? That I am really looking at this range here. Okay, I'm really looking at this range here before I even consider buying. Okay, obviously we never know where's the bottom. Okay, and I think I really switched the attention away from crypto, right? Away from crypto because I want people to realize that if they set themselves up right for the next 6, 12, 18 months. Now we're going to observe the market for the next 6, 12, 18 months. We're not going to be buying in right now. Okay, we're not going to be buying in right now because we want to see where it's supported. Because right now the dump is still happening. Stock markets, right? And there are certain, there are certain countries that don't even allow their citizens to short the market. Okay, so they clearly know that it's bad when you restrict. Now, the next option that if you want to capitalize on is just buying put options. When you are able to buy put options on certain things, you are able to capitalize on the downtrend of that particular asset class. So put options is probably a option, right? A put option is also an option. Haha. So you can do that. But put options also have a decay, so meaning that it has a short time frame. So it expires maybe 1 month down the road, 3 months down the road, 90 days or something like that. It's not something that you can hold long term. Whereas if you are not into buying put options, you can always wait for a certain level. Like myself, I am not going to be buying any put options myself. I am just going to be buying up the asset classes or buying up the ETF or buying up the index when it reaches my range. Now the problem right now is assessing the severity of this whole global meltdown. It's a meltdown, guys. It's not just look. The coronavirus is one thing. Okay, the coronavirus is bad. I'm not saying that it's not bad, but it accelerated and it gave an excuse for people to exit the market. That's what the fuck it is. Okay, it is really an excuse for people to exit the market. So right now, it's all about firstly, don't enter the market if you're going to be concerned about your financial future. This is not the time for you to put in money if you do not know where your next paycheck is going to come from. If you don't have 6 months of emergency funds in your bank accounts, in fact, man, I better not even say 6 months. If you don't have 12 months of emergency funds, and I know that most people do not have this kind of liquidity in their bank account. I know they don't have it. They don't have it at all. So if you don't have that kind of emergency funds, liquid cash, right, sitting in your pillow or in your cupboard, in your cookie tin, you don't touch anything that I'm mentioning. Like, don't touch it, man. Don't even think about buying Bitcoin. Don't even think about buying altcoins. Wow. And don't even think about buying anything in the stock market. But hear me out. If your job is secure, your financial situation, your finances are in order. That means you know that, okay, either I have low to no credit card debt, I have no heavy mortgages to pay, I have only one home and I'm keeping up with the payments. I don't see myself defaulting on that. My family's health is all good. I have no elderly parents that I need to take care of or rely on me. You should be taking the next 6, 12 to 18 months to start looking into the markets that will probably set you up for the next 24, 48 to even 5, 15, 10 years down the road. That is what you should be doing. You should be starting to pay attention because right now a lot of stuff is on sale, or at least is starting to get relatively cheaper. Significantly cheaper. That is what you should be doing and not be oblivious and continue the path. Because like I said, the inflation is going to kick in. Your purchasing power of your fiat is going to go lower. Everything is going to be taken away from you in percentages. Taxes are going to be one of those things. At the same time, interest rate environment will obviously maintain low for now, right? And will be maintaining low for the next foreseeable future, which is good for people who are borrowing, right? People who are good at borrowing and able to leverage on that. Now, not saying that you should borrow to go and throw it into the stock market. Right now, everything is still dropping. Until there is a clear-cut consolidation, there could be a decent V-shaped bounce on certain things, right? But if you think about it, if they say that the stimulus is going to help, why is there practically no bounce in the stock market, right? Why is there no bounce? Because people are not falling for it anymore. People are not falling for it anymore, guys. Look, it's still dropping. It's still dropping until today. So I would assume that there's going to be occasional bounces, and then after the continuation of it to go down. So S&P, I think, right? S&P, if I look at the charts, right, I would really be very, very interested only when it starts hitting the 1,005 range, right? The 1,005 range, this is kind of like, okay, why am I looking at the pre-1,005 range? This is kind of like, before the stimulus really kicked in, when it was, a little bit more spurred up by growth, actual innovation, stuff like that. So this is the kind of the period that I'm looking at. And obviously it could fall further. That's the thing, right? That's the scary thing. Because when I look at my own my own Singapore Airlines, so let me look at, okay, let me just show you, right? The Singapore Airlines at the moment. Singapore Airlines practically had a large part of their airlines, 96% of the fleet are currently grounded at the moment. So even Singapore Airlines, right? So this is the SARS period, right? SARS period, the price of Singapore Airlines was about, okay, so let's look at the monthly close, guys. It was $7.87 during subprime, right? The close was about $10. Okay, so the highs are 20, right? But right now, because of COVID and everything else, it's $5.36. So obviously it's worse, right? Obviously it's worse because right now borders are being closed and shut down. So all these are opportunities that you have to start opening up your eyes. Right? You don't have to look at, Singapore or whatever. I'm just asking you to kind of pay attention to opportunities within your own country, right? And then from then, if crypto is something that you want to look at, sure. You can always follow and click and subscribe to the channel. There's also the free group to kind of come in and chat. But a lot of the information is always in my private group. So these are the things, man. Right now, I would say that everybody's but Kev V, V-shaped recovery, right, is probably not going to happen. It's going to be a consolidation. There's going to be a consolidation in the market where the market for at least a few number of months is going to try to figure itself out. V-shaped is not the right thing. You have technical bounces, but you're not going to have a V-shaped recovery. I don't see it. Okay. I would say that if you are looking at the if you're looking at investing, right, that should come as a secondary, as I mentioned before, and I repeat myself again. If job security is there, you have emergency funds available to you. Your finances are in order where you're not going to be late on your mortgage payments, your car payments, or if you can do without a car, that would be awesome. But obviously, it's not always the case. If you are having, if your health is 100%, right? Yeah, you should really start looking. You really, really should start looking, guys, because I am just salivating at all the deals out there. I cannot stop like commenting and talking about what's Tesla going to be like in the next 6 to 12 months, what's American Airlines going to be like in the next 6 to 12 months, what SIA is going to be like in the next 6 to 12 months. All are on sale, guys. Everything is starting to be very, very cheap. And I think this is the part where, if you want to talk about the flip, right, or the wealth transfer or whatever you want to call it, man, now is the time to start looking. I mean, look, you don't have to be putting a lot of money into this market. Seriously, you don't really have to even if you are not savvy and you don't know exactly know what stock to look at, right? You can always just buy the index. You can always just buy the index, guys. Like keep it simple for yourself. You know what I mean? Imagine if the S&P, right? If the S&P falls, right, to 1,005, that's like what, 50% off? 50% off, guys, from where it used to be. So you could, in the next, right, obviously you allow you allow a 10-year cycle. This is not going to be fast money. This is not going to be fast money. I guarantee that it's not going to be fast money, because each time the economy tries to heal itself, it's a 10-year cycle. It's a 10-year cycle for it to heal itself. And it takes about 1 to 2 years to kind of rebound and stabilize and stuff. And then people start getting hired. And then, people start spending again. You want the domestic and global spending to start picking up. But right now, manufacturing is completely smashed, right? Because most manufacturing hubs are in China. So obviously China really got smashed because of coronavirus, right? So a lot of all these manufacturing hubs, labs or whatever are all gone. Like literally they can close down. So a large part of the spending, and a lot of everybody knows, right? If you go to Italy, majority of the time you see people from China. You go to any country, the spending and the real spending really comes from China, guys. And right now, if you're seeing people shutting their gates off to China, right, because you're Asian and stuff like that, then yeah, the economy is not going to grow very, very quickly, because at that point of time, the spending really came from the Asians. Okay, you're talking about rich Indonesians. You're talking about let's talk about Singaporeans. I mean, Singaporeans, we do go and spend, but we're just not that large to kind of really do too much. But majority, everything came from China. Property also from China. You gotta just admit that, guys. All the nice Beverly Hills high-end property in Manhattan and everything, go and speak to a broker. Who are their top clients? It's either from Russia or China, right? These are the two countries that have kind of been fueling the property market or inflating the property market. It's the truth. It's the truth. You just have to open your eyes, man. So these are the things that are going to be happening. And yeah, I mean, it's the West is no longer the main driver. Okay, the West is no longer the main driver. The main driver is still Asia. And the truth of the matter is that as we're gonna pick up fast. Okay, once we pick up, we regain our footing, right? Everything can just start. Everything can just kickstart a little bit easier. All right, guys. So anyway, yep. That's all I have to say. Set yourself up, guys. The next 6, 12, 18 months are going to be very, very crucial for those who are looking at the markets. I'm not suggesting that you get in. Nobody can call the bottom, but the moment the levels are ripe, definitely I'm going to be sharing it in my private groups. And then that's when we're going to be starting to put money into the market. And then when we start putting money into the market, we're going to set ourselves up for the next 5, 10, 15, 20 years. That's where we build our whole nest egg, guys. That's just how it is. I will bring as many people as I can along and set themselves for financial freedom. That's my objective. It was always my objective to do that. And I don't care about anything else. To me, helping the average person become and achieve the lifestyle that they've always wanted is why I wake up every day. It's really nothing to do with myself, because whatever that I want to achieve is always because I feel that if I can live a certain lifestyle, I think, and with my kind of background, someone who doesn't have a degree, I don't have rich parents. I came from a very, average income family. If I can now have the kind of lifestyle, I feel that you guys can achieve that too. You don't have to be damn smart or be a PhD or whatever. Seriously, you don't, man. All you have to do is just wait and be more patient and make great financial decisions. And we're talking about not spending frivolously when the economy picks up. You still focus and plow money into your portfolio so that you can set yourself up for the next 5, 10, 20 years to come, right? And look, I've helped students who were still studying. They graduated. They were able to start a business. I've helped people who are in their mid-30s. I've helped people who are retiring, planning their retirement portfolio. I've helped the whole spectrum of people, guys. So the only question is, are you open-minded enough to take that first step? That's the only thing. Alright, guys. Anyway, thanks for watching. See you in the next live stream. Hey, Shaw. Make sure you click the link. Everything is in the link in the description below.